NIO's Q3 earnings report is coming out next week, and it's expected to play a large role in shaping the future of the company, so keep watching for the next 10 minutes as we find out what to expect from this report. But before we do that, subscribe to our channel, $1 World, for regular NIO stock updates. In the fast-paced world of electric vehicles, NIO is set to captivate the audience with its upcoming performance, the unveiling of its third quarter 2023 results on December 5th, scheduled to take place before the market opens. Like the anticipation before the curtain rises on a grand production, investors are eagerly awaiting insights into the company's financial performance. Our analysis, akin to seasoned theater critics, have scrutinized the script, with the Zacks consensus estimate forecasting a loss per share of 43 cents and revenues reaching a crescendo at $2.63 billion for the quarter. This financial choreography reflects a nuanced storyline, as the estimated loss per share has narrowed by 2 cents in the past 90 days. However, this dance with losses suggests a 19.4% decline from the year-ago reported numbers, juxtaposed against the 44% year-over-year growth in revenues. The stage was set with the last reported quarter delivering a performance that was wider than expected. NIO incurred a loss per share of 51 cents, surpassing the Zacks consensus estimate of a loss of 36 cents. This loss, a wider gap than the year-ago figure of 25 cents, was attributed to lower vehicle margins and higher operating expenses. The financial plot thickened as revenues fell short at $1.2 billion. Lagging behind the Zacks consensus estimate of $1.35 billion and marking a 14.8% decline year-over-year due to lower delivery volume. Amidst the backdrop of these financial theatrics, the third quarter of 2023 saw NIO delivering 55,432 vehicles, falling within the guided range of 55,000 to 57,000 vehicles. This delivery spectacle witnessed a 75.4% year-over-year surge but fell short of the model estimate of 56,822 units. Adding a touch of innovation to the performance, NIO launched the all-new EC6, a smart electric coupe SUV based on NIO Technology 2.0, boasting upgraded design, performance, and intelligence features. As the financial curtain prepares to rise for the third quarter, our projections hint at a promising act. Revenues from vehicle sales are forecasted to be 17,368.4 million RMB, indicating a robust growth of 45.6%, fueled by a surge in year-over-year deliveries. The projection for other sales suggests an even more dramatic year-over-year growth of 60%, yet every captivating performance has its share of challenges. The looming shadow of high costs of goods sold threatens to weigh on margins. While the orchestra of high SG&A and R&D expenses might play the role of the villain, NIO, like a seasoned actor, has been navigating the hurdles of high operating expenses for several quarters, and the trend is expected to persist, driven by new products, technology expansion initiatives, and marketing activities. As investors settle into their seats, eager for a riveting financial performance, our proven model refrains from conclusively predicting an earnings beat for NIO. The earnings ESP stands at 0.00%, a reflection of the most accurate estimate aligning with the Zacks consensus estimate. Although the company carries a Zacks rank of 2, the lack of positive earnings ESP dims the prospects of an unequivocal victory. In the symphony of peer releases, XPeng's act unfolded with a narrower loss per share for the third quarter of 2023, beating the Zacks consensus estimate. Total revenues danced to a 25% year-over-year increase, with vehicle sales rising by 25.7%. However, the plot thickened as gross margins stumbled into a negative 2.7%, a stark fall from the 13.5% registered in the year-ago period. The vehicle margin, too, took a hit, dropping to a negative 6.1%. Yet, XPeng foresees a spectacular fourth quarter, expecting deliveries within the range of 59,500 to 63,500 units, indicating a jump of 168 to 186%. Revenues are envisioned to surge within the band of 12.7 to 13.6 billion RMB, promising a spectacular performance. Meanwhile, Li Auto took the stage with a blockbuster performance, posting earnings per share of 45 cents for the third quarter of 2023. Revenues from vehicle sales skyrocketed to $4.61 billion, marking a phenomenal 271.6% year-over-year increase. The overall performance was nothing short of theatrical grandeur, with total deliveries reaching 105,108 units, a staggering 296.3% surge from the year-ago period. As the financial drama unfolds, Li Auto's script for the fourth quarter anticipates deliveries within the range of 125,000 to 128,000 units, implying a jump of 169 to 176.3%. Revenues are envisioned to hit the high notes, ranging between 5.27 to 5.40 billion RMB, indicating a surge of 117.9 to 123.1%. As NIO prepares to take center stage on December 5th, investors find themselves on the edge of their seats, anticipating a performance where financials harmonize with innovation, and the spotlight is on a stage where potential losses might be overshadowed by the promise of growth. The electric vehicle arena, much like a captivating theatrical production, continues to be a dynamic and evolving narrative, with each quarter unveiling a new act in the ongoing drama of technological prowess and market dynamics. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Talking about the NIO Stock Performance, NIO currently trading at $7.40 with a market capitalization of $12.57 billion is poised to disclose its financial results for the third quarter of 2023 on December 5th, despite facing a minor setback with a day's change of negative 0.07 or negative 0.94%. The stock's performance is closely monitored within a day range of $7 to $7.26. The 52-week range spans from $7 to $16.18, reflecting the company's resilience in a fluctuating market. Noteworthy collaborations, such as the partnership with Changan Auto for battery swapping, underscore NIO's commitment to innovation. However, recent market dynamics have seen the stock experience drops despite broader market gains, prompting analysts to maintain a consensus hold rating, though opinions vary, with some advocating a buy and others cautioning a sell. In terms of key financial indicators, NIO's earnings per share or EPS stands at negative $1.82, and the price-to-earnings ratio or P/E ratio is not applicable. The technical analysis reveals a relative strength index or RSI of 33.74, while the moving average convergence divergence or MACD indicates negative 0.36 and negative 0.28. Stochastic values stand at a K of 19.83 and a D of 37.01, reflecting the stock's current positioning and potential for future movements. As NIO navigates the evolving electric vehicle landscape, investors remain attuned to the company's performance and strategic collaborations. Coming back to the recent news surrounding NIO, in a narrative that transcends the conventional, NIO and Changan Automobile have scripted a transformative agreement, signed not merely in ink but in the spirit of reshaping the very foundations of the electric vehicle or EV landscape. William Li, the luminary founder, chairman, and CEO of NIO, and Huarong Zhu, the distinguished chairman and party secretary of Changan Mobile, took the spotlight during the signing ceremony, orchestrating a collaboration that extends far beyond the ordinary. This collaboration, a symphony of innovation and experience, goes beyond the typical partnership seen in the industry. It aims to set new benchmarks, not just for swappable batteries but for an entire ecosystem. The agreement outlines a strategic blueprint to establish standards for swappable batteries, create a comprehensive battery swapping network, collaborate on the development of swappable vehicles, and institute an efficient mechanism for managing this critical energy asset. The protagonists of this narrative, including Li Hongqin, co-founder and president of NIO, and Fei Shen, the insightful senior vice president of NIO, lent their presence, bearing witness to the unfolding of this pivotal chapter. Their collective vision stretches beyond a partnership. It's a commitment to sculpting an enduring legacy in the unfolding story of automotive history. At its core, this collaboration responds to the imperative need to fortify the recharging infrastructure for smart EVs. The protagonists firmly believe that battery swapping is the linchpin to a dynamic, efficient, and sustainable recharging solution. In an era where sustainable energy solutions are gaining momentum, this collaboration stands as a beacon, lighting the way toward a future aligned with the demands of the New Energy Vehicle Industry Development Plan, guided by the directives of Chinese authorities, who have articulated documents and guidelines advocating for the widespread adoption of battery swapping. This partnership resonates with the ideals encapsulated in key industry documents. These foundational documents envision a future where battery swapping is not just a model but a universally embraced standard, optimizing the judicious use of resources. Changan Mobile, with an illustrious 39-year legacy in vehicle production, becomes a key player in this collaboration. Operating 12 bases and 22 factories globally, their wealth of experience becomes a cornerstone, laying the groundwork for a new paradigm in the electric vehicle ecosystem. Meanwhile, NIO, a trailblazer in battery swapping networks, stands as a pioneer with a global footprint of more than 2,100 power swap stations. In 2023 alone, NIO aimed to install an additional 1,000 stations in China, fortifying its commitment to provide users with seamless access to sustainable energy solutions. As of November 20th, 2023, NIO's power swap stations have executed over 32 million battery swaps, a testament to the widespread adoption of this revolutionary concept. In a reflective note, William Li shares that NIO has spent the last 5 years accumulating a wealth of experience in the research and development, construction, and operations of power swap stations. Now, in an altruistic turn, NIO stands ready to unfurl its technological prowess and infrastructural marvels to the entire industry, inviting a collaborative journey toward a future where electric mobility is not just a choice, but a conscientious lifestyle. As the curtains draw close on this epic-making agreement, the collaboration between NIO and Changan Automobile emerges as a cinematic spectacle, a plot thick with innovation, sustainability, and a shared vision for a future where electric vehicles seamlessly integrate into the fabric of our daily lives. The automotive stage, once dominated by traditional paradigms, is now witnessing the rise of a new era, and NIO and Changan Auto stand as the protagonists in this enthralling narrative, shaping the future of smart electric mobility. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comment section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.